Hi there, Shingirai here again with another update on portfolio performance over the past week. On a relatively risk-on week, we saw performance returning ranging from CBAM 4 returning 0.92% down to CBAM 1 returning minus 0.05% on a fairly risk-on week, where 9 out of 10 of the CBAM portfolios outperformed their respective benchmarks. In terms of main contributors to performance, we saw strong performance from Hypnosis Songs Trust up 6.41%, as market and investors continued to make speculative bets that there would be a seize or a capitulation in the Federal Reserve Bank interest rate hike cycle, which would obviously be a tailwind for the interest or income heavy asset underlying the Hypnosis Songs Trust. We also saw quite a strong performance in rebound for UK equities, with the FTSE 250 up 1.63%, alongside the LNG FTSE 100 up 2.16%, and then in today's reading of UK GDP coming in slightly flat as well. In terms of detractors from performance, that 50 basis point interest rate hike coming from the ECB was some of a headwind that we saw for European government bonds leading up to that, as a lagged effect, down minus 1.23% on the week. And then we also continue to see some headwinds for Chinese equity, with HSBC MSCI China and Bailey Gifford China down more than 0.8% on the 1 week basis as well. But just looking at China on a broader sort of economy scale, we did see some encouraging trade balance data improving more than analysts had forecast, especially seeing exports rising 14% over the month, and that'll be extremely encouraging for the China narrative, and also the inflation reading coming in at 0.7%, clearly painting a case here that perhaps the inflation problem is more confined towards the West and rather than the eastern side of the globe. Switching over to a quarter-to-date basis, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 3 up 77 basis points down to CBAM 5 V2, which was up 0.26%. Again, we highlight again here, seeing the strong performance from Hypnosis since the 31st of March on a quarter-to-date basis, also up 8.64%, alongside UK 100, again up 2.56%. And finally, we did see a rebound for our US equity income position through JP Morgan, which was up 2.29% on the back of some recovery that we're seeing in the financial sector, which was sold off over the past couple of weeks on concerns of some weakness in the banking sector. In terms of detractors from performance, again, we see China appearing there at the top as all 3 bottom performing funds on a quarter-to-date basis for reasons I mentioned earlier, down minus 2.74% and more for Columbia Threadneedle, HSBC MSCI China, Bailey Gifford China as well, down more than 2.7%. But then again, also switching over to currency, we do continue to see some recovery there for sterling, also breaking through that 1.25 to the dollar barrier, which was a psychological barrier, and hopefully would form a new floor in terms of support there, and that would support our 80% hedged US equity position, which we've been talking about consistently throughout the past couple of months. We also saw US CPI data, also encouraging, with the inflation reading coming in at 5% versus estimates that were around 5.2%. But then the story playing out here is that core inflation continues to be sticky, and that would be heir to the argument of a Federal Reserve Bank continuing on its rate hike cycles, with one more interest rate hike priced in the main meetings at the beginning in the Federal Reserve meeting in the first 2 weeks of May. In today's trading, markets are relatively green on the back of speculative trades, obviously on capitulation of interest rate hikes, but of course we'll be seeing more on a relatively short trading week, which is only 4 days. We'll see how that plays out coming into the new week on Monday.